What's up, owner investor? In this video, we're going to figure out what problem Spotify is solving for its customers. So this video will be very similar to the previous one. So just download the case documents, the PDF file underneath the video, and spend like 10 to 15 minutes going through it, answering these same questions, except now instead of Costco, you're going to do this for Spotify, just so you get like more and more practice of answering these questions. So if most people are probably familiar with what Spotify does, and it's going to seem like this is a useless exercise, right? Because it's like, of course I know what problem Spotify is solving. I use it every day, right? But I want to build this muscle of really breaking down things into first principles to be able to explain it to a fifth grader that's not familiar with Spotify, right? Or another way to think about it is like if an alien, came up to you and was like, "Hey, what's Spotify?" And you had to explain it to that alien. That's the kind of approach I would take, because the better that we get at this skill of being able to explain the problem that a business is solving, then when you're looking at like some kind of B2B business that is like a consulting business, or like it creates like a component part that goes into like this complicated supply chain, that you're able to apply the same simple frameworks to businesses that are easy to understand, like Costco and Spotify and Basic Fit, to businesses that are more complicated to understand and to explain. It'll also help you cultivate this this standard of excellence in terms of like, okay, do I really know what the fuck I'm talking about, right? Because oftentimes it might seem like we know exactly what a business does, but when we have to explain it to a fifth grader, then we realize like, oh, okay, I actually don't understand this from first principles. So I would try to resist that urge of, just because you're familiar with the product, that you just skipped over this exercise, but to actually do the exercise of like writing down the words of how you would explain this to someone else, to an alien or to a fifth grader, whichever one you prefer. So go ahead and download those case docs. One quick note about this one. This one's 45 pages, but it's not actually 45 pages. There's like a ton of like charts and like double space, and there's like ads and stuff in here. There's also a lot of words in here that you should just straight up ignore. So I've purposely included a little bit more information than what's relevant for you to answer the questions. That way you get some practice as well in terms of like what to focus on, right? Like I'll give you one clue. It's like this timeline up here. About Bill Simmons Media, Defense of Growth Inc., Findaway World LLC. Like this stuff does not matter, right? To figuring out this key question, what problem is Spotify solving? So yeah, go ahead and go through that exercise. Spend like 10 to 15 minutes or even 20 minutes, however long you want, and then come back and we'll go through it. All right, now that you have gone through it, let's go through these case docs. Okay, so again, I threw a little curveball in here for you. I actually wouldn't start necessarily with the business overview on this one, right? In terms of figuring out what problem Spotify is trying to solve. So what I would do here is the article that really frames this up is boom, right here, right? So this is an interview, like Daniel Ek, the founder of Spotify, is talking about the problem that he was solving with Spotify, right? I don't think I would have been interested in music if it wasn't for piracy, to be honest, because I come from a working class family. We couldn't afford all the records I wanted, right? So this was kind of the problem with the music industry before Spotify. If you can remember that, I certainly do, it was like really annoying process to like find a new song that you like, download it, and then sync it up with your phone, or if you were using Pirate Bay or like torrents, you'd have to go find like the torrent file and then wait for someone to seed. It was like a lot of steps involved in just going from like discovery all the way to like actually listening to the song, right? And not only the other kind of curveball with Spotify is it's not just solving a problem for customers, but it also solved a huge problem for the music industry, which was dying right before Spotify was founded, right? Like this is like one of the most powerful charts I've ever seen. Like you can see from like 2001, the music industry's revenue was just in secular decline, right? This is global music industry revenue. As far as I understand, it's in dollars, but I'm pretty sure it's global. Um, Secular decline all the way until 2014 when Spotify really started taking off, right? And that's when this streaming revenue takes off, right? So yeah, I mean, Spotify gets a lot of heat from artists because not all the artists on Spotify can make a living off of their art, but that's just because there's so many artists, right? It's competitive. The other thing is like consumers, because they were so used to like free music for so long, they're not really willing to pay as much as they are to like go to the movies as there are for music. There's this like mental barrier that it'll take some time to overcome, right? So there's not as much dollars coming in. So that means from the consumers. So and then there's also the economics have to be split with the record label, and so that's what causes a lot of this friction. But make no mistake, like without streaming, the music industry was completely fucked, right? So Spotify is like the essential component of the music industry, right? Obviously, the artists are extremely important, and create amazing music, and it's just music is like a key part of the human experience, right? Going back like thousands of years. So the artists have always been like the most important part, but in terms of the business end of things, Spotify basically saved the music industry, right? Um, so that's a really important thing to realize here is that Spotify solves a couple of problems, right? And it's kind of embedded in that entire music ecosystem. And that's a rare thing, right? Like a lot of businesses that solve problems aren't didn't necessarily save that industry, right? Didn't necessarily save that ecosystem, right? So that's a really important thing to remember with Spotify. So as we kind of tick through this, some of the stuff that I highlighted, yeah, like instead of reading the words, I just showed you the chart here. They've paid like 34 billion euros in royalties since it was founded. Um, they have 100 million tracks and 5 million podcast titles now. So that's kind of an amazing thing, right? Like it's a one-stop shop for customers because the music library is so massive, right? And you're going from this like transaction-based to access-based model. It's just a significantly better customer experience. And then the other aspect of this business is the discovery, right? I think for me personally, like probably 80% of the songs I listen to now on Spotify, I discovered on Spotify that I didn't know those songs existed, right? And I think the stat from this article, again, because we want to have the balanced view, inside and outside view, it was somewhere near, it was like 30% of, yeah, here we go, right? So Spotify recommended over 30% of overall listening in 2017, up from less than 20% in 2015. So that percentage is probably even higher today as we sit here in 2023. So that's a really important part about the Spotify, like what problem they're solving is also discovery, right? Try to kind of think back, if you're old enough, to what it was like to actually discover a new song before Spotify. Obviously, there's stuff like SoundCloud and YouTube that are free now, but the discovery, unless you've actually tried Spotify, is pretty remarkable. Let's keep going here. So women are 56%, so pretty wide demographic in terms of gender, and then there's also generally skews younger, but pretty wide appeal, right? 30% of Americans reported using Spotify every month in 2021. That's pretty amazing. North Americans, 140 minutes daily on Spotify. So this is a nice comparison that we can do to Costco now, right? The churn Um, okay, so this is a monthly churn number. Remember, I mentioned in the previous video, a lot of companies will say monthly instead of annual to kind of make their numbers seem a little better. So, okay, so at the end of 2021, it was a 3.9% monthly churn, right? So that comes out to a 53% retention rate. Versus, remember, Costco is at like 90%. And here's how this is a really powerful metric, right? So we can this is how you can calculate roughly how long an average subscriber sticks around. So for Spotify, that's like 1.9 years, okay? Because their annual retention is only 53%. When your annual retention is 90%, what did I do here? Screwed up the math here. Yeah, so the average, so back in, at the end of 2021, the average Spotify subscriber in the premium segment, right, so not the ad supported, stuck around for 2.1 years, right? For Costco, it's 10 years. It's not related to like the problem it is kind of related to the problem that Spotify is solving because it's not valued as highly as the Costco customers, right? But they give you a little bit more detail here, right? In developed markets, strong reductions, declining 2.4%, declining to 1 to 2% in our most mature markets. So let's just say it's like 1.5% in their most mature markets. Still, 5.6 years. That's pretty good. But remember, this is how I want to kind of show you how powerful that 90% customer retention is. And again, this is not like an accounting concept, right? You're not going to see this on the financial statements. Where you will see it is, and we'll talk about this in the next section, but you'll see companies with higher churn will tend to have lower margins because they have to spend, they have this leaky bucket, right, that they have to keep filling with advertising, acquiring new customers because there's so many customers that are leaving the business every year. So this is a really important metric. This is not something that was like readily available. I had to go into like a transcript into their investor day that they did, I think last year or a couple of years ago. So again, like when you're doing this on your own, you gotta have to be a little be willing to spend a little bit more time kind of finding all this stuff. But also, if you kind of use a system I described in one of the previous videos of, using command find, reading other people's work to kind of help you navigate like what to focus on and what the company discloses, that process will become significantly less painful for you. So we already talked about this, the discovery aspect of the business, a lot of fluff here. We already talked about this part. Yeah, I mean, that's it. So let's just go through the answers real quick, kind of the bottom line here. Okay, so what problem is Spotify solving for its customers? So before Spotify, there was a lot of friction in listening to music, right? Discovering new songs on your own, finding them individually on iTunes, YouTube, or Pirate Bay, paying for each individual song, or if you're pirating, kind of that whole nightmare of like finding the torrent and then like waiting for someone to seed and then like download it and it's low quality and then you got to sync it with your mobile device. It's a whole thing, right? So Spotify not only solved that problem with streaming, but they also they saved the music industry, right? Because it was dying because of Napster and piracy. And the other aspect of this is that I think we're starting to see now is before Spotify, people relied on mainstream media for news and analysis. And now a lot of experts, and albeit a lot of amateurs as well, with maybe less informed opinions, right? They're doing kind of direct consumer podcasts, right? So the All In podcast is a great example of that. It's four, kind of titans of industry and venture capital that are kind of explaining from first principles how they think about like news and key world events, right? The quality of that information is significantly higher than what we've seen from like traditional media outlets, right? Because they're able to go direct to consumer through Spotify, instead of having all this like overhead, they don't have like fancy studios and like lighting and all that stuff. Um, and but you just get like really high quality information, and Spotify is becoming a platform for that exchange, right? So how do they solve it? Through a streaming service, right, with a monthly cost for the premium version, and then a free ad-supported version, right? So they scaled quickly and got the largest library of music and podcasts. They've gone head to head with Apple, and we'll talk about this in the next section. But despite competing with Apple, Spotify is still the leader in streaming, right? The amazing discovery capability, right? Again, I'm biased because I love the product, but again, we saw that stat of in 2017, 30% of listening was recommended by Spotify. They also gave record labels ownership in Spotify. I think that was mentioned in one of the articles. And it's directionally better for artists, but they still have a long way to go to compensate artists better, because there's just not enough revenue coming in from the consumers to really make it work in a meaningful way for artists. But the system today is still drastically better than the system for artists, like 15, 20 years ago, right? So who are Spotify's customers? People, businesses, or governments? It's people. Does Spotify target a specific type of person? Yeah, it skews younger, but fairly broad appeal. I think like 90% of the population listens to music. I think this is the one thing that maybe we didn't talk about when I reviewed it, is this is huge, right? People spend a lot of time on music, right? The average US listener above the age of 12 spent 16 hours listening to online music every week in 2021, right? So here's like a quick little like back of the envelope math that you can do. And by the way, like investing is a lot of these like story problems where you're doing like this, simple napkin math, right? So, okay, so 16 hours a week times 4 weeks in a month, right? So 64 hours. And I think like the monthly cost in the US, the monthly cost varies based on what region you're in, but let's just run with $15 for premium in the US, right? That comes out to 23 cents per hour of entertainment, right? Like when you go to the movies, you pay like $15 for like, a couple hours of entertainment, right? You pay like $7.50. But with music streaming, it's like 23 cents, right? So you can view that in a couple of ways, right? One is it's providing an enormous amount of value for customers, and the price is still relatively low. The other aspect of this is that you could say that there's still a lot of room for Spotify to increase pricing because there's such a wide gap in the dollar per hour of entertainment that you're getting. But remember that the churn is still pretty high, right? Where's that churn metric? Yeah, right here, right? The churn is still like relatively high versus something like Costco, right? So you gotta have to like balance all of those perspectives, and kind of balancing these different metrics that kind of signal different things helps us kind of avoid getting too excited or too optimistic or pessimistic about a stock, right? Kind of seeing like both sides, being a little bit more balanced. Okay, cool. That's it for this video. As always, post your comments, questions, random thoughts below. Love to have a discussion as always. Yeah, let's keep going. I'll see you in the next video.